Basically, I discussed with Allah, and he told me that some of you guys are interested to have some knowledge about the IRA, and that's why I'm here to give you a little bit background about the IRAs, that what different kind of IRAs are there. You know, some of you may be already participating in those, and the knowledge we have about the IRAs is very limited. So this is what I have seen. Even if you are contributing in one of those, still, you know, you may not be aware that what you can do exactly with that, because the choices are limited as per the institutions that we are working with. So I'm here to give you a background that what different kind of IRAs. I'll walk you through. If you have any questions, you can ask me during the presentation. You can ask me after that, and we'll see that what other choices we can make to invest your money instead of just in stocks and bonds toward the real estate especially. So let me start. If you see that there are mainly two different kind of IRAs. One is called individual IRA, and one is another type is which is managed by the employer. So the basic ones are, like everybody knows, this is like traditional IRA, and one is Roth IRA. What is the difference between these two? I can explain that one as well. Let's go through with the traditional IRA. Traditional IRA is basically you put your money in with one of the institutions who is offering the IRA. What happens basically that you don't pay tax on that money, but you invest that money into that account, and that money grows tax-free. So you are deferring your tax basically on your current income, but when you get that money back, you have to pay taxes on that one. So the benefit is that you're not paying tax today, one thing. Second thing, as you are contributing in that IRA, so you are not you are getting another credit while filing the taxes, because it reduces your adjusted income. And there are some certain limitations that who can contribute, who cannot contribute. It depends on that if you are working, your spouse is working, what amount of income you are getting. So there are certain thresholds on that one. So up till certain limit, you can contribute to that one, and when you go beyond that limit, let's suppose if you are filing married, filing joint, and your combined income is more than $190,000, you can contribute to that, but you'll not be getting any credit for that. So, and then when you will get your money back, you will be paying taxes on that one, and there's certain age limit on that, like until age 59 and a half. Before that, if you get your money back, one, you will be paying taxes, and then an additional 10% tax that you have to pay. That is called penalty, because that account is supposed to be your retirement account. You are not supposed to get your money back, because you are deferring the taxes and you are saving that money for your retirement. So that's why IRS has certain regulations about that, that if you will get that money back before your age 59 and a half, so you have to pay some additional taxes on that one, which is called 10% penalty. And then at a certain age, which is 70 and a half, when you reach to that age, so in that account where your money is accumulating, you have to take a required minimum distribution. So if you don't get that distribution back, again, you will be charged a penalty. So, and the next one is Roth IRA, which is totally opposite to the traditional IRA. Like in the first one, you were contributing your money before taxes. In the Roth, you are contributing your money after taxes. So you have already paid taxes on that one. You are putting your money into the Roth IRA. But all the gains that you are getting, like you are putting some into the mutual funds, into the stocks, anywhere else, and all the earnings that you are getting, those are not taxable. Those grow tax-free. Whenever you will get them back, at that time you will basically pay the tax on that one. But there are certain limitations and privileges on that one as well. Like after 5 years setting up your Roth IRA, you can get your money back. No charges, no penalty on that one. And the earnings and the growth that you have basically accumulated on that account, you'll not be paying taxes on that one when your age is 59 and a half or above. And still, like if your age is 70 and a half, you can still contribute into that one. And if you just want to keep your money there because for some reason, okay, so you don't want to get your money back, so you just want to keep there, there's no penalty in keeping that. So if you see that they are totally opposite to each other, traditional IRA and Roth IRA. So any of you guys currently having any IRAs?
Yeah. 401k?
Yeah, like that is employer based basically. This is the traditional, and Roth is individual, you can say. And when we talk about the employer based, there are different types. So I'll walk you through all that.
What about deferred compensation?
Sorry?
Deferred compensation.
Yeah.
Same thing as the...
It's deferred compensation is basically you're not being compensated, you're deferring that compensation. Right. Like 401k, you're getting money on your W2, right? But some portion of that you're putting into 401k, so you're deferring your compensation, so you're not paying taxes on that. Okay, the next one, a little bit comparison that I've already given it to you. So after the presentation, we can Tala, you can send them the presentation. If you guys have any question, anything you can. And I can also, if you need any help later on as well, you can send me an email, you can give me a call. I'll try to get you whatever knowledge I have, I'll provide it to you. If not, I can point you to the right direction as well. Okay. The one that I've explained, you can say those are kind of individual retirement accounts. So there are other ways like employer-based accounts. And when we talk employer-based account, there are 4 or 5 different IRAs. The one is SEP, which is the first one, then simple, then the qualified plans. Like everybody who is working with some of the employers, they have 401k plan, they have matching plans as well. And there are some others, 403B and 457B. So 403B is for the tax exempt organizations. When they manage their IRAs for their employees, they call it 403. And the same case is like the certain state governments, they have their IRAs, which is called 457. So let me explain you a little bit about SEP and simple. SEP is Simplified Employee Pension Plan. What happens in this one is like if you are a self-employed, if you are not working somewhere, if you're self-employed running your own show, so you can set up your own, or you can set up this for your employees. So the requirement is at least you have like minimum 1 employee, or you can do it for yourself. It's the same thing as traditional IRA. You can get the tax deduction on this one as a business, or when you are self-employed or you're the owner of your own business and you are setting up for yourself, you can get the tax deduction as you're getting in the IRA, individual IRA. And now how much you can contribute, there's a certain limit on that one, which is basically like if you have an employee, so you cannot go beyond the 25% of the employee compensation. So you have to see which is the low. Either it has to be 25% of your employee's compensation, or there's a dollar value for that one. So whichever is less. Like for 2014, $53,000, $52,000, and for current year it is $53,000. So the difference is that SEP, you as an employer can only contribute. Your employee is not allowed to contribute. So only you, but you can set it up for your employees as well. So there are different organizations where organizations want to give benefit to their employees and just want to have the IRA set up for them. So this is for that kind of businesses. So they want to retain their workforce and they want to give some benefit. This is one of the IRAs. Okay, the next one is simple, which is saving incentive matching plan for the employees. The main difference between the first one, which is SEP, and the simple is, in this one, employee can also contribute, but it is not compulsory. Again, if employee wants to contribute something, they can contribute, but employer has to contribute in that one. And the contribution of employees are 2 different types, which is called elective, and the other one is called non-elective. When it is elective, means like if some employees want or elect to contribute, then there is a certain limit on the employer that how much employer will be contributing. So employer will contribute about 3%, up till 3% of employee's salary, if employee is contributing. And if employee is not contributing, and if only employer is contributing, it's the 2% limit on the employee's compensation. And the limit on the employee compensation is, it's under $260,000 basically. Up till that amount, 2% non-elective contributions, you can do that. So these are more related to the people who have small businesses, or like one-man show, and they want to set up their IRAs like while filing taxes, right? Just want to give you a little bit on the other side knowledge is, everybody wants to reduce their taxes. So IRAs is a very good thing to reduce your taxes, but you need to see that which kind. So if you are not working for some employer, if you are running your own business, you can set up for yourself SEP IRA, where you can put your money for the future growth, and also at the same time you are getting a lot of tax benefits because you are reducing your adjusted gross income, which basically when you put all your incomes and other deductions, you arrive at adjusted gross income. So on that income basis, your tax is calculated. So if you are reducing that one, it is a great help for you guys. So these are like kind of as I told you before, like for the small businesses. Now if you look at the bigger businesses, big organizations, they have 401k plans. So what happens in a 401k plans, they offer different kind of matching principle. Like either they can say like, okay, we are offering 3% matching, and then for another 5% we will match 0.5% or so. So it really depends on that what different kind of IRAs are available and how much they will be contributing. I would encourage you guys, if you are working with those kind of bigger employers, always invest in that. It gives you a lot of benefit while reducing your taxes and saving money for your future as well. Now, the knowledge that we have about the IRAs, right? What happens, we put our money and then we don't look at that. How it is growing, it really depends on what kind of portfolio you have. Like at employer place, if you are contributing to 401k plan, so there must be a custodian. Like if it is Fidelity, it is Bank of America, either like ABC, any other organization who is managing 401k. So what happens? They'll give you the information. Okay, this is our, let's suppose Fidelity is our custodian. And what you can do, you can go into that account. You can see that, okay, you are contributing how much is your growth every year, every quarter. And you can also manage your portfolio as well. So you can see that what kind of investments you want to make. Mostly all these different kind of IRAs have very limited investments. The investments are only bonds, stocks, mutual funds. Most of these, I would say like 98% of those IRAs are managing these kind of things. So what you can do basically is, you can go and alter your portfolio according to your choices. Like if you are early at your career level, so you want to go a little bit aggressive. So what you do basically, you may be investing 70 to 80% in the stocks and less into the bonds. But as you grow and just want to save money, and it should not be, as you see that the market is so volatile, every other day it's going up or down. So if you want to stay away with that, stay away from that one, what you do basically, you invest in more into the bonds and mutual funds. So growth is smaller, but that is kind of a guaranteed in long term. In the stocks, it's always risky. So if you put a lot of your percentage of IRAs into the stocks, the growth is high and also the risk is high. So it really depends on you guys how you want to manage your portfolios in your 401k. So the next one, I just want to show you that what are the investment options. So the investment options you have is very limited. When you are having an employer-based account, and then what you see that, okay, either you can see those different kind of stocks or mutual funds and mutual bonds, or different organizations, those are managing those IRAs. They also have their own funds available. So what they can do, like they take different 20, 40 different stocks and bonds, and they put them in one fund and they say, okay, this is the fund. So you'll get the details this is for the aggressive investors, or this is for the kind of protective kind of investment. So you go and choose between those. But as per Internal Revenue Code 408, IRS has certain regulations that what you can do with those IRA accounts, what you cannot do with those accounts. And if you want to have a little more grasp, a little more liberty with that account, then there are different options available. And that different option where you have the choice, like why we are here to have some knowledge about that. If you have money in your IRA, how you can utilize that money to invest in the real estate as compared to investing it in the bonds and mutual funds. So that kind of IRA is called the self-directed IRA. This is a very unique concept, and this is not new. Believe me, this is old as original IRA, which is introduced by IRS back in 1974. But like very limited organizations are there, those are managing these kind of IRAs. That's why most of us are not aware that how you will be utilizing that. As I said, that is a self-directed IRA is identical to the IRA. The same thing as IRA. Okay? The difference is, as compared to the traditional IRA or 401k IRA, what is the main difference between the self-directed IRA and the other IRAs? In this one, you have more liberty. Okay? What liberty you have? You can direct your custodian. Who is custodian? Custodian is the one who manages your IRA, right? Currently, if you are working with some employer, as I said, maybe Fidelity is managing your 401k. So that is called custodian. Now, for self-directed IRA, the same way the custodians are there. But between these custodians and the traditional custodians is a hell lot of difference, because more complex, so you need a specialized custodian to manage these kind of accounts. So the next thing is what they do basically. Instead of investing in stocks and bonds, they do alternative investment options. So alternative investment options are real estates, private mortgages, private company stocks, oil and gas, horses, intellectual property, anything.
What's intellectual property?
Intellectual property means like specialized, like coins or some artifacts, some paintings. So specialized things. So this is
some patents also.
Okay. Other than the regular stocks, bonds, mutual funds. So this is a diversified area. This is the alternative investment. So what you need to do is, if you are interested in these kind of situations where you have a lot of money piling up in your 401k and you're not doing anything with that one because you don't have a lot of control on that one, it's just sitting there, your custodian is just managing there, and you may be getting some 3%, 5% return on that one. And if you want to get out of that one, then self-directed IRA is the choice for you guys. But how it works exactly it's not a straightforward or easy thing. It's a very complex situation. So what you need to do is, first of all, you need to identify that what are the custodians, or like what are those self-directed companies, self-directed IRA companies. So you should have a knowledge about those companies first. So before going to that one, let me give you a process that how self-directed IRA works. It's a simple 3-step process. What are those 3 steps processes? First, identify your investment and request fund. Identifying an investment is like if you are interested in some property, right? If you want to flip that property, or if you want to build a new property, you like that investment, you have gone through some research on that one, and you know that okay, it's a good prospect attached to that one. So this is firstly identifying your prospect. So first you identify, now what you need to do is transfer your fund. So how the funds will be transferred? So before even transferring the funds, you need to identify that custodian who can manage these kind of investments. I'll take you that step a little further after this one, but just want to give you an idea that how it works. Because the confusion in our mind is, oh, our paycheck, put it there and it's boom, it's just going. Now, if like some property and I want to invest in that property, so what I need to do is I have to have a self-directed IRA, because in the current custodian situation, I cannot instruct them, or you cannot instruct them, okay, instead of investing my money into that stock or bond or mutual fund, invest my money into that area, because they are not supposed to do that, they don't work for that. So you need to find out that who are the self-directed IRA custodians, so you need to see those first. And then once you identify your property or your investment, then you will say, okay, transfer my fund from my existing IRA to this custodian's IRA. So what happens, it's not like that you can get your money out of your existing IRA and then invest it over there. So there are three ways you can fund your self-directed IRA. Either if you have your existing IRA with existing company and that company allows you to roll that over from one account to the other account. Rolling over means that you can get your money out, and then within 60 days, if you deposit that money into any other IRA account, you don't have to pay any taxes. So either you can roll it over. The other way of doing it is transferring your IRA. Means people switches jobs, right? So if you are on a first job and you switch to another one and then switch to the third one, and you have IRAs sitting with those previous employers, so you can transfer that IRA to this self-directed IRA if you are in that kind of a situation. Or if you don't have an IRA and if you want to set up an IRA, and instead of doing that investment in a traditional IRA, you can directly contribute to this self-directed IRA. So there are three different ways of contributing towards that self-directed IRA. So once the money is there in the self-directed IRA, so that custodian is holding your money. And now, because it's a self-directed custodian, that gives you power to decide and give you alternatives to work on that money that they are holding. So once the money is in their account, what you will do basically, you say, I need this property, so that custodian will go and purchase that property or whatever you want to do with that one. So what happens, that money goes, that money is not on your name, that property is not on your name. That property will be on the IRA name. It's not that you are putting money in the self-custodian IRA and then you are getting everything back to you. You just have to keep in mind this is an IRA. It's the retirement account. But you are getting more privilege to utilize that money in that IRA account. So what happens if you want to buy some property, want to flip it, so that property will be owned by that IRA that you own basically. And then after doing all those flipping or whatever the process you want to go through, you do that and finally you direct your custodian now want to sell it. So custodian will basically do all the paperwork, like as they have done it while buying the property. Now while selling the property, they will take care of all the documentations, okay? And they will take care of all the expenses, because none of the expenses you are putting from out of your pocket, everything is coming from the IRA, and once you will sell it and whatever the profit after the expenses, it is going back to the IRA. So you are getting the liberty, but it's not like if you have somewhere in your mind that I'll be getting that money right now. No, but you will be getting, because it's your money, you are increasing your wealth as compared to 2 to 5% growth. If you are investing into the property, you're getting the property, IRA is paying for that property, and when you are selling it, IRA is taking care of all those things. And if you look at, if you do a comparison between the growth that you have, which is 2 to 5% in a regular IRA, you may be having 10-15% in this one. But you see the complexity that everything is taken care by the custodian. So that's why it is very important to choose a custodian with a great deal of knowledge and expertise. No one has expertise and knowledge unless you go into that area and see that. But there are certain guidelines that you need to follow if you want to go that route. So I'm going to just give you an overview of like choosing a self-directed custodian. How are you going to choose self-directed custodian? As I told you, it's a very important task. and your choice can have an impact on your investment and the amount of time spent managing them. And if you see that there are a lot of self-directed IRA custodians available in the market. Some of those are huge, like those have more than $2 billion investments. Those they are managing for different kind of companies or individuals. Then there are mid-size self-directed IRAs, and then there are smaller self-directed IRAs. There are a lot of companies, there are a lot of IRS regulations as well, that what you can do, what you cannot do. So you have to pay more attention while selecting a custodian. So while selecting a custodian, you need to see the specialization. So from where you're going to get this all information, I can direct you to the different websites. You can go there, you can check. You can check with like 3 or 4 different custodians and see what is their specialty. Maybe some are specialized in real estate. Some are specialized in other areas. So you may be interested only into the real estate area. So you need to first filter through those custodians and see that who is specialized in that area, who is specialized in flipping houses or buying the new properties and doing the real estate. Second thing is fees. There are different kind of fees attached to their services. Okay, sometimes the fees are on annual basis. Sometimes their fees are on transaction basis. So you need to see that in your kind of investment, which one is better for you. A yearly fee is better, or maybe you are flipping houses in like 3 or 4 times in a year. So a transactional basis fee is a better idea. So you can go through, when you will be finalizing your custodian, you can make a list of 3 or 4, see what is their specialization, what different kind of fees they have, what kind of fee structures they have. So you can list down all those. And then the number of transactions. Some of the custodians have fees as per transaction, I said. And some of those charges on an annual basis. So you really need to see that if your transaction is like you are doing 5 transactions every day. So you don't want to go transaction based. You may want to go on annual based or monthly based fees. So you really need to go through these details. And then every different self-directed custodian have some miscellaneous fees as well. So you really need to keep an eye on those ones. Because while selecting, you need to ask questions. That okay, this is what I'm going to do. What kind of fees are attached to that one? Is there any hidden fee? Is there any other thing that I need to be aware of while selecting you guys? And then at last, service. You need to see, maybe go and check the reviews of those custodians and see what different kind of services they have offered, if they have any complaints, or like they are good or best in the industry. So the main purpose basically to explain here is, as you have your money jam-packed in an IRA where you don't have a lot of choices available, this is the way basically that you can move that money from that traditional IRA or your employer's IRAs into this self-directed IRAs, and then that self-directed IRA custodian gives you choices. Give you choices means that you can go and see that what kind of investment you are interested in, and you see that it's a safe investment for me, then you direct your self-directed custodian, and then they invest into that property or whatever you are interested in. So they utilize your IRA money, and then every expense is coming out of that account, and then when you get money back, it goes back to the IRA. So it's giving you more rate of return, it's more protected, and you have more control on that one. And self-directed IRA, I have listed a couple of links here where you can, will send you this presentation, you can click on that link, and then you can see, you will find a lot of different self-directed IRAs where you can get their more information on them. If you have any questions,
I have a question. So some of these guys, are like future investors. There's one person who is gonna be starting a project with us this week, inshallah. So can these guys tell the custodian, the IRA custodian, I want you to give the money to this company, and they are gonna manage and they're gonna take care of the project for me? Is that possible?
It really depends. I said it really depends on the kind of services those custodians are providing. So if you want to be engaged in that kind of service, so before selecting or while selecting that kind of like any kind of a custodian, you can ask these questions.
I see.
That okay, what is my option? Like if I like that property, and instead of I ask you to go buy this property, because I want to flip it. So if I want to flip it, I want to hire this company. So you can give money to this company to take that property, and then whatever the expenses are required to have the improvements on that one. So yeah, I think the possibility is there. Yeah.
Okay.
Self-directed custodian can transfer money to your account, whatever from the IRA account, and as per the requirement, whatever you will spend, you need to provide the great deal of documentation. The documentation is key, basically.
How long yearly it takes to set up a self-directed IRA? Is it a long process?
No, it's a very simple process. As far as this process is concerned, once you have identified, right, like Entrust Group is one of the biggest self-directed IRA.
Isn't it?
Entrust. Yeah. So Entrust, you say, okay, I'm ready to go with this company. So what you will do basically, you'll tell them, I want to open an IRA account. So maybe within an hour, if you are like working directly with their branch, or if you're working online, you can get your IRA account open in a day. Now the next thing is that you have opened the account, now you need to transfer the money. So that you really need to see that what kind of existing IRA you have. If you are working with the employer currently, I have seen in 95% cases they don't allow money to be transferred unless you are with them. But as if you have an old employer IRA, you can right away you can transfer money.
Bring it over.
Yeah. So you open account, transfer money, and then after that.
Okay. My next question is, let's say if I transfer the money in self-directed IRA and I'm going to go for the deal, and due to some reason the deal didn't work out, and that money is going to be sitting in that self-directed IRA, is there going to be any penalty for not investing that money for a certain period? Maybe next opportunity would be next 2 months or 3 months or 6 months down the road. So that money is sitting and not growing, because it's supposed to grow all the time,
Yeah.
That's the idea behind it.
Yes.
So what would be the consequences for that?
Yeah, very good question. Basically, like as you said that the money in IRA is supposed to grow, but your choice is that I want to do it self-directed. Self-directed means I want to have control. So now the growth is basically depending on you. So if you are not able to finalize a deal, and if you are not able to invest that money, your money will stay like that, and you will be paying fees on that one. So when you are certain that okay, I have the deal and I want to invest over there, definitely you'll spend money on that one. But if you don't have a deal for 6 months and money is just sitting there, you'll not be getting any growth. Because this is a self-directed IRA, this is not a traditional IRA where it will be automatically invested into the stocks and bonds.
Yeah, but not having a growth will penalize you?
No.
From the...
It's not a penalty from anywhere, but it is kind of an inherent penalty. It's kind of an inherent penalty. I'm not investing and I'm not getting anything.
Yeah.
So these two custodians that you gave are known to do like real estate?
Yeah, these are basically the two links. If you click on one first link, it will show you about like 30 or 40 different custodians.
Different custodians.
Yes.
I see.
As I told you, the first link will take you to the different areas, like the huge self-directed IRA where those are managing more than $2 billion investments. Then you'll see $500 to $1 billion, and then you see below 500 million. So you will all see all the details on these links.
Have you had any clients that have done
Self-directed IRA?
self-directed in real estate specifically?
No, kind of a new concept, as I told you before. The actual concept of self-directed IRA is there from 1974, but a lot of people are not aware. A lot of people don't know that where you can utilize that. But when one of my clients, they really want to do real estate, or they want to invest in the real estate, and they are working with existing employer, and they do have IRA, I always direct them that think about the self-directed IRA. Instead of utilizing your own money, you can utilize your already money which is sitting there. But as of now, existing any client that have self-directed IRA custodian, no, I don't have any.
And that's one of the reasons why we're having this class, is because we started getting people asking us, can we invest from our 401ks and stuff. So, we have limited knowledge of that. So then we said, okay, let's go to an expert, because you always want to go to an expert in every case. So we said, okay, let's put together a class and see what we can do to give answers to the questions that people have. So that's the reason why we're having this class.
Do you think what is the max you can contribute to the IRA totaling up? If you're contributing max in your 401k, there are limits, right? To
$17,500 the max you can do that.
now, if you've done that in a 401k, then there's no more pre-tax in opening a separate another IRA.
Yes.
You hit the limit, but you can contribute post-tax.
Yes, which is Roth IRA, which is where you can put the post-tax money. But again, there's a certain limit on that one. You cannot go beyond $5,500 a year.
No, but if you've already maxed, let's say Roth and 401k, you can still contribute post-tax traditional IRA up to another limit, I think.
No, basically, the problem is that if you already have an employer-based 401k, right, and if you are beyond the certain limits, you cannot open an individual IRA. That's the regulation that IRS has.
Okay.
Say it again, please.
Like if you are contributing at an employer place, and then you want to open another IRA, you may be able to open it for your wife. But if you will open for yourself, and if you are beyond the limits, which is $190,000, you cannot contribute.
But let's say if you are working with some other company before, and you had the 401k plan set up with them, and you're no longer with them, now you join the new company and start all over, like new 401k with them, but whatever money you had left over there, that money you can put on your own IRA. Right?
You can put it anywhere. You can
Right.
roll it over.
So that is
anywhere.
not going to be considered as like opening up a new account.
This is not an opening up a new account.
Okay.
Basically,
Got it.
that will be basically transferring or
Okay.
rolling over from an existing account to another account.
The limitation is on the annual contribution.
Yes.
Now, if I want to move, let's say, most likely your employer custodian most likely doesn't do self-directed, right?
No.
So if you want to change that and get part or all the money into a self-directed, it's mostly under the discretion of your employer or
Yes.
your custodian, right? They may say, this is not fine, we don't do this, right? It's up to them, whatever regulation whatever that, big stack of paper they had you sign on it when you started.
That's why I said in the beginning that mostly 98%, if you are with a current employer, they will not allow you to transfer that money. Yes, you can do one more thing. You can get a loan against that one. But again, like getting a loan, putting into other, it's more complexity is that. But the most appropriate kind of a situation is like if you are rolling it over to another account if your company allows. Or if you have an IRA which is sitting there from a previous employer. Or then you can roll it over existing IRA to a Roth IRA, and then from Roth IRA later if you want to do self-directed IRA. But as far as you are with the current employer, there are very less chances that you can be able to utilize that money for self-directed IRA.
You can find out from your HR actually, and the word is used in-service rollover.
In-service
In-service
rollover. So I want to keep it as an IRA, but I want to roll it over into some other custodian.
In-service rollover.
Okay.
Because you are
That's the
working
keyword.
in service. Yeah.
Mostly they offer basically loans on the existing
Yeah,
IRAs.
I'm aware that I've utilized it in the past.
Okay.
So how much loan can you borrow from your 401k? Is there any limit for that?
Yeah, again it depends on how much they want to give you. I've seen limits like maybe $50,000, $100,000 you can get it.
So if you take that 50,000 for example, and you want to invest it, now it's become taxable. So
Loan is not taxable.
no, what I mean, I'm sorry. I'm
Pay
thinking
it
like
back.
if you're gonna put it in that flipping the house,
Yeah.
okay, you're just paying it back. Yeah. So
Yeah,
that-
because
you're out
when you get the loan against your IRA, that is not a penalty. You have to pay it back.
Right.
So it's a nice option basically. You are not hurting your savings,
Right.
and because you know that you are returning it back, so your investment will.
But you're supposed to pay the interest on that, right?
Yeah. Nobody
Interest
gives you
goes
interest
directly.
And but then it goes to yourself. Nobody else.
You have to pay it.
And let's say if you borrow the money and you invest in the property and you make some money on the property, so that profit you have made
that is separate from your
So that's
IRA.
separate. You're liable to pay the taxes on that one.
You are liable, you will file your
you will not be
taxes.
penalized, like early withdrawal or whatever.
You invested loan into the property, you made some money, you return your loan. Whatever you made on your property, you need to pay taxes on that.
So if you have a next deal coming for real estate investment, and typically it's a LLC, right? So let's say someone is bringing in cash, someone is bringing in some other form, and one person is bringing a self-directed IRA. So are you able to handle that transaction?
It will be the first.
First, okay.
First of a kind.
Yeah. So that's what I'm saying. Is
Yeah,
be able to handle it?
Yeah, yeah.
Okay.
As far as handling is concerned, it's just like if you are giving money,
Yeah.
or it is another company giving money to you. So if as far as that self-directed custodian to you is ready to give this money to this company, for them it's just the money that you want to utilize somewhere. So, but yes, whatever
The
the
structure is
requirements,
there.
yes, whatever the requirement that custodian will have, you have to fulfill all those requirements as far as the papers are concerned.
And you don't have a preferred custodian in this case.
No,
You don't
this is
have
the
a
first
local-
time.
Okay.
I'm learning also, as you are. So
So
it'll be your first time if you do something like that.
and I think the big issue would be in the self-directed IRA, they want the property in your name. So in this case, you'd have to convince your custodian that that property will never be in your name; it'll be in another company's name.
It will be on custodian's, your IRA's name. Whoever is managing your
Right.
IRA, it will be on IRA's name.
Well, in their name. That's what they would normally want. But if you're going through, let's say, TSQ, the property is always in TSQ's name. It won't be in your custodian's name ever.
You can work out with the custodian that if you want, because what I know is property has to be an IRA's name. So if they will give you the money, right, and if you utilize that money to buy that property, so the paperwork will be for that IRA, not for TSQ. TSQ will not be owning the property.
What's TSQ?
LLC will be owning the property.
What's
LLC.
TSQ?
TSQ is the company.
Oh, company. Okay, sorry. Okay, so my question is, let's say there are three partners, in that investment. Two of them, they bring the cash, and the other guy is bringing self-directed IRA. So why are the two people who bring the cash, they want, the property to be under the self-directed company or custodian name, because their money is cash money, because
No, in that case, basically, if you are not a single owner, right, you are a partner in the ownership.
Yeah.
So whatever the ownership partnership, like if you are 3 people and 33% partners, so you will still be 33% partner of the property, but that IRA will own 33%.
30% share in that investment.
Yes. It's not an
It's
individual.
LLC.
Okay, yeah.
It's LLC.
LLC.
Yeah, it's a project-based LLC.
If you don't have any other questions, we had another question for you, which some people ask about the profit that they get from a project. So I remember you were suggesting that they should put that in a business name. So what can you say about that? Because some people then said that why go through all that hassle of setting up a company, and then say if you make like 10, 15 and then you got to pay taxes on the company at the end of the year, so is it really worth it?
Yes, it is, because like what you really want to do, like if you want to do that, you want to make money and don't want to pay tax, it will not work. Whoever is making money, they have to pay taxes on that one, right? So making an LLC in between it's kind of a protection. If something goes wrong tomorrow, right, and if you are just taking it on your name and somebody gets hurt while flipping that house, who will be responsible? You, yourself. And if it's a company in between, then you are protected. So if anything goes wrong and if anybody comes and sue you, it will be suing the company, not to your assets. It will be limited towards or till the LLC assets. One thing, that is a protection on the first place. Secondly, yes, you will be making money, you will be paying taxes on that one, but as you are doing it under a business, so you have a lot of privileges of putting a lot of expenses around that. So you may be having some tax benefit over there.
And also, if you add it to your individual taxes, you're probably making like 100, 120,000. Add to it 100, whatever, 10, 15.
It will
You're
put
paying
you-
on the top brackets, while if it's just the 15, it's much less
Yeah,
income annually, so the taxes for it are small, I would assume.
yeah. And people, believe me, like for the last 5 years that I'm doing it, LLCs don't, like, a lot of people don't want to show, or they don't have a lot of, they don't want to show the profit. So less is the profit, less is the tax relief.
It's not a hustle to like set up your LLC and do. There's only the filing for the taxes annually. That's the only paperwork you have to do for the LLC, right?
Yeah,
Once
LLC
you
is the
set it up.
simplest form of, and it gives you the protection of a corporation. It's the best way of doing that.
I'm not sure. Does LLC has to have an end date, or is that option? Like when you
It's
set it up, you say it's a 5 years, or you don't have to choose
It's
that.
optional.
You can make it indefinite.
Yes, you can make it. While creating a company, you can say, okay, I'll be ending this company on such and such date. And if you don't want to define any date, it will be on, forever. Until and unless you close it.
And the fund does not have to be in under the LLC account or books. So, for example, I'm investing $50,000 individually. It doesn't have to be on the books of the LLC. Only the profit that I'm getting from TSQ will go there, and that would be the only amounts for the LLC. The money that I invested, it's my personal money. I'm getting it back when the project
Yes.
is,
Yeah.
and it's not taxable. Obviously, it's my money. I gave it up. I got it back.
Because
The
that's
way
a
of-
loan, right? Because that's a loan, and then
The way of doing that is, you are investing $50,000, your own money, to buy the property. So what you do basically, you input an LLC in between. What you do basically, you can transfer that money to LLC, because LLC will be buying the property, flipping it, having expenses, selling it, and getting the profit. So that $50,000 that you have given to your company, at the end of the year, you can get that $50,000 back, no taxes on that, because it is a return of capital that you have invested. It's a working capital that you are getting back. Now the profit that you got after all those expenses, only that profit is liable to pay taxes.
And this LLC structure is basically set up by TSQ, right?
no, this is
LLC
on.
No,
this
the
is on-
real estate. Once the real estate
The one that owns
identified.
the property
Yeah,
is
yeah,
you
that,
guys
yeah,
will
that's
take
set
care
up.
of that.
Like for example, we're starting up a project this next week, so I set up a separate company for that because that's there's like a few people involved in that. So all of them are going to be partners. They're all going to sign joint venture agreements, and then after we're done with that project, I'm going to go to him. We're going to close the company. That's it.
Yeah.
Yeah, we'll
For
resolve
each
the
project,
company once you're done with the
Yeah.
project.
So for each project, you're going to start a separate company.
Yep. Yeah. That's to keep the accounting
Accounting.
separate,
That
because
makes
then we have a separate bank account that we open
Yeah.
up for each, so the funds don't
So once you
commingle.
sell it off, then you just close the whole deal.
Yeah, then we just close it, so it's done.
What does it cost to set up an LLC? I know it's not that much. I'm just curious.
$120.
$125 state charges, about $250 the other charges. Under $500 you can set up.
And is there like a monthly fee?
No, it's an annual
It's a one-time
$50.
one-time
And
fee.
you can do it online.
Oh, nice.
Yeah, you can do it online. I mean, he's there also. He can help you out. So you have a lot of options.
So it's not like you have to show insurance or
No.
any kind of.
But you have to have the tax ID number, right?
Yeah. When you open an LLC,
Yeah,
then there are a couple of other things that you need to do the filings.
exactly.
Done in a couple of days.
So this is ideal for self-directed
Yeah.
IRA, really. Okay, yeah, I wasn't aware of that. I mean, we were thinking, I know me and Amar were, our company IRAs to roll it over
To roll it over to some.
to, flipping
Yeah.
houses.
Yeah. Whenever you get that money back, you need to pay taxes with the self-employed, like with the current employer. But you can check with the current employer
Yeah.
if
Yes.
they have any option of.
The other option, I guess, is if you switch jobs and you can change it. They can't control it, right?
Yeah. When
And then you
when
can ask them to
Ah.
switch it to a self-directed instead of your employer, because
that is your money now.
right.
Once you
Okay.
leave that employer, whatever you want to do with that money, they don't have any control on that.
Yeah.
Just take it out, transfer it, roll it over, whatever you want to do.
Move it to a self-directed or an
Wherever you want.
individual. Or, okay.
I see.
And this 60-day rule is basically applied
Rollovers.
rollovers. So if it's not rolled over, then
Then you have to pay taxes.
make you pay penalty plus tax.
Yes. If you are under 59.5, you'll pay me 10% extra.
Do you know what the current interest rate for the loans from your 401k or
Around, it's above 5.35 to 5.6575.
What, it's a standard rate for those?
It's not a standard rate, but normally I've seen that most of the companies are
Oh, I see.
offering in that range.
But that goes to
but
you.
it's simple, it's not compound, right? It's what's the term?
I don't know what kind of loan they are charging.
You know, one time I had borrowed money when I was buying my house from my 401k, and I remember that was about 15 years ago. You know, they were charging me 10% interest.
1% interest.
Yes, exactly.
Before 2008, probably.
That was 1999. To be exact, yeah.
Right time.
So that 10%
But that was going to be to my account
it
because
goes
that's
directly to you.
directly to me, exactly.
And you pay it back
You
installment.
just install it. Exactly. 15 years they give it to you, but it's up to you. You can pay it off in 2 years, 5 years, whatever.
So the only way to really avoid having this income from sale of flipping not taxable is to have it either within the self-directed IRA, have the proceeds coming back within that. That's the only way to
Yeah.
defer those.
Yeah, you can defer those.
I mean, that's the
and
only
then-
way, right?
Or if you have your own money, like LLCs and all those, and
Right, where you could
you can
look
see
at
a
that
lot of
or some
expenses,
those.
so it will reduce your taxes.
Yeah, that's what I've been reading. The profit comes back, proceeds. So he's invested 100, you got 115 back. Now you have new 115, the entire amount available for the next project. So that's the good thing about it. And now you're invested 115, for example, and now you're getting, let's say, another 15. So now your self-director has 130, which is fully available,
Right.
the entire amount for the third project. So that's a good
So
thing
it's a
about it.
growth.
Yeah.
You know, managing your wealth is like much more in self-directed IRA as compared to the traditional or other ones.
Or similarly, if you hold a rented property, then the rental income goes right back to the IRA.
Yes. They're also managing rentals as well, mortgage insurance and all those things.
Any other questions you have?
Is there any company in New Jersey that does self-directed IRA?
In New Jersey, I don't know, maybe there. I've not gone through a lot of those lists, but yes, sure, they should be there. New York especially, yes. There must be a lot of those. We give you my card, so if you have any questions.
Alright, while he's passing out the cards, we want to thank everyone for coming. I hope you learned quite a bit. I learned a lot because this is new information for me as well. So we thank you, Usman, for coming and sharing all this. So we're gonna try to have these kind of seminars very frequently. So the next one that I'm thinking of having is inshallah we're gonna try to invite a person that I know. He does mindset coaching for like top VPs, CEOs of companies like PayPal and stuff. So I know him personally. So he does like very high level coaching. So hopefully we're gonna have. He's not here in this area, so that's probably gonna be like a video conference where we'll project it on the screen and then they'll do like a quick presentation. He charges a lot of money for his stuff, so we're gonna try to keep it simple, just to give some good content, and then later on we'll kind of maybe get into some other things. So if you have any other suggestions on things that you want to learn about, just let me know. Then we can have other professionals just like Usman, have them come in, and they can teach you, more things. So our goal is really it's not just about real estate. It's really to become better professionally, career-wise, mentally, physically, spiritually, everything. So we want to help you in any way possible, inshallah, to become better people. Alright, so thank you, Usman, for coming. Thank you, everyone, for
Thank you, guys.
coming.
Thank you.
And feel free to have some coffee. If you have any questions, hang around. We're here for a few more minutes. Okay, thank you.
Thanks.
All right, bye.